Welcome back to Discover Finance. Today, we're diving into the recent market turmoil triggered by concerns over the Chinese yuan. If you're interested in understanding what's causing this chaos and how it could impact global markets, stay tuned. This week, markets have been extremely volatile, with the spotlight on the Chinese yuan. Analysts worry that the yuan could spark a new wave of turmoil similar to the recent sell-off from Japanese yen carry trades back in 2018. But why is this happening? The yuan has been under pressure due to China's economic ties with Russia. Since U.S. sanctions on Russia, China has stepped in as a key trading partner, making the yuan more prominent in their trade. As of now, the yuan accounts for 42% of all foreign currency trades on the Moscow exchange, surpassing the U.S. dollar. One major factor in the yuan's decline is the risk of U.S. sanctions. The U.S. Treasury has threatened secondary sanctions on entities doing business with Russia, putting China at risk. This has led central banks to increase their U.S. dollar holdings while reducing yuan reserves. Recent data shows global reserves of the U.S. dollar have increased by 1.3%, while yuan reserves have dropped by 0.5%. To support the yuan, China has cut interest rates by 0.25% to make borrowing cheaper and stimulate economic activity. However, this move also makes the yuan less attractive to foreign investors seeking higher returns. Additionally, China has restricted lending to Russian clients to align more closely with international sanctions against Russia and mitigate the risk of secondary sanctions from the U.S. Despite these measures, the yuan continues to struggle, reflecting broader concerns about China's economic stability and geopolitical risks. Let's look at a similar scenario in the past. In 2015, the Chinese government devalued the yuan by nearly 2% to boost exports and combat slowing economic growth. This move led to significant global market volatility, with the Dow Jones Industrial Average dropping over 1,000 points in a single day. The current situation shows some parallels, though the underlying reasons differ. Looking ahead, analysts from Goldman Sachs expect weak Chinese growth fundamentals to limit any substantial rally in the yuan. The focus will be on whether the People's Bank of China will implement further rate cuts to stabilize the economy. They might also introduce other monetary or fiscal measures to support growth. The yuan's rise in global trade finance shows China's strategic push to increase its financial influence despite current challenges. According to the SWIFT payment system, the yuan's share of global transactions rose to 2.7% in June 2023, up from 2.1% last year. In conclusion, the current volatility surrounding the yuan is a complex issue with multiple factors at play. From geopolitical risks to economic fundamentals, the situation is dynamic and requires close monitoring. For investors and policymakers, the key will be to navigate these uncertainties with strategic foresight. That's it for today's update. If you found this information useful, don't forget to like, subscribe, and hit the notification bell for more updates. Thanks for watching Discover Finance.